2018, what should the mining sector expect? Are we looking towards cautious optimism, or perhaps another year of caution?
Well, I think miners are always optimists. You've got to kind of be an optimist to be in the mining business. One of the things I heard actually on the panel that I was part of this morning is that generalist investors are beginning to look again more excitedly or more actively at the mining industry as a whole. And I think that's something that's been absent from the market, or largely absent from the market for some time. We've always had our specialist investors, the commodity guys, the precious metals guys, and so forth. And they've been supporting the industry to some extent as best they can all the way through. But I think now we're beginning to see generalist fund managers looking at the mining industry as a whole and then honing in on particular parts of it afresh. And that's, if that's the case, hope so, that's a really, really positive sign. What I think is interesting is the thing that's brought, I believe, that started to bring those guys back into the market as potential buyers of mining stocks is one of these big societal, structural changes that happens from time to time. So, one of the things that everyone talks about a lot is an aging population. Whether that's got anything to do good or bad for the mining industry, I don't know. But another thing that's happening that I think really is very positive for the mining industry is the shift to electric vehicles, to the generation of energy by renewable and sustainable means, wind, solar, and therefore the demand for batteries, both large-scale batteries for sort of industrial or residential grid-scale use, and the ones that we're more familiar with, batteries that go in portable devices like our phones and our computers, but now it's going to be our buses, our trucks, our cars, maybe even our aircraft. And that's everybody believes that is happening and happening really fast. That kind of has a slightly, that's sort of mitigated to some extent, I would say, by the fact that it's probable that vehicles will be largely driverless, and therefore they'll be used in different ways. So rather than everybody here having a car or a truck, we will have access to a vehicle. So actually the total number of vehicles might go down. I don't really know. It's really changing fast. They're all going to be electric, and that gets people interested in all those battery minerals and materials like graphite and nickel and cobalt and lithium and all the others that I can't remember at the moment.
But
it brings people back to mining. It makes people look again at mining as an absolute core part of the value chain of society.
Graham, you talked about the large fund managers coming back into this space.
The generalists.
The generalists coming back into this space. What about for the retail investor? Are you seeing them show much more interest in mining? Or if there's opportunities there for them?
I think the markets that Toronto operates, the TSX and particularly the venture exchange, are very well suited to retail investors. So I think we've got a large universe of investable companies, over 3,000 listed companies, 1,200 mining companies, which is more than really all the other stock exchanges in the world put together. So if you're a retail investor or a potential retail investor and you're interested in mining as a part of the economy to put some of your money, you'll find more of it, more opportunities to do it at all different levels of scale in Toronto than anywhere else. One of the really defining features about the markets in Canada is the level of participation by retail. Other exchanges, they'll get retail attention in a small subset of stocks. There'll be a hot list of 4 or 5 or 10. Institutions tend to move in herds, like large animals across a plain, because they've only really got, they've got large amounts of money to deploy. They respond to this. They're all professional money managers, so they respond to the same sort of inputs as each other. They're subject to the same sort of peer group evaluations, pressures, competition as each other. If you take 100 retail investors, their lives are very different. Where they are in it, they may be old, they may be young, they may be men, they may be women, they may be rich, they may be not very rich. They may be buying or selling for all sorts of different reasons. It adds an enormous richness to the market. I think the mining sector is getting more attention, so that's got to be good in general, but which of the stocks to trade? you have to ask someone who's allowed to talk about that.
That's fine. Do you think you could expect some consolidation on the markets going forward?
There's already been a certain amount of consolidation on the junior market. As I said, I didn't come to this conference last year for various reasons. In 2015, the last time I was here, there was a lot of pressure on juniors. Conditions for financing were not great. I think conditions for financing are better now. And there was a lot of pressure on juniors to do things, whether it was to reverse stock split or to get involved in the M&A business, or there was pressure on the exchange in two quite different directions. One said we should make it easier for them, one said we should make it harder for them. I actually think 2 years of market life has resolved a lot of that pressure. So the number of companies, juniors, has gone down. The value of them has gone up. So I think the M&A process and the acquisition and disposal process is working. It's always going to be a fact of life. The panel that I was on earlier, there was a question specifically about M&A, and it was interesting that from some of the big fund managers, there was quite a lot of caution about getting involved certainly in large-scale M&A. And I think there is a generation of CEOs and CFOs now, certainly at the majors and at the sort of the larger end of the market in general, who've learnt the lessons of their predecessors very well. So there's less enthusiasm to go out and make large acquisitions. But I think at the junior level, there's always good opportunities. And the number of projects and tenements and properties that are being sold is quite good.
So Graham, any final thoughts coming out of your panel discussion related to the health of the mining sector?
I feel so much better than I did when I was last here 2 years ago.
That's good.
Maybe it was good just to take a break. But actually, I think what happened, the market recovered in every sense. So yeah, values and prices are a bit higher, and that's good. But also the market kind of recovered its will to live, its vigor, its health, and its strength. I think 2018 will be a good year for mining in general. I think it's going to be a good year for markets, and I think equity markets in general are going to be strong for a number of bigger reasons. And I think mining will definitely play its part in that. Very important for us. It's like 20% of our business is mining. We are highly, we're aligned, we're exposed, we're leveraged. What's good for mining is good for the TSX and the TSX venture.
It's a great point to leave it at. Thanks so much, Graham.
Thanks for having me.